Hi everyone, welcome to my YouTube channel. My name is Tabitha, and if you're new to this channel, please subscribe for more videos. Today we are going to talk about disposal of capital asset. If you have had your capital asset for the last 5 years and now you want to dispose it or sell it so you can get rid of it, what do you get? Do you get a loss or do you get a gain? And when you get a gain, so how do you record it in your books, finance book? So let's look at it. So here we have this house, and the house is sold. You have received some cash from the buyer, and then now you go back to your book and see how much did this house cost when you bought it, and how much has it depreciated over the years, and how much has it and what's the difference between the net book value now and the cost that you bought it. So this is the thing that we are going to do the whole of this video. So disposal of capital assets is what happens when you sell your tangible or intangible asset. Do you get a loss or do you get a gain? So here we'll have we have to go look and remove the original cost from your book, remove the accumulated depreciation from your book, and then now you will look at the cash that you have been given from the buyer, and then look at the net book value after calculating it, and then now you can now see how you can record your loss or a gain. And then when you record your loss or a gain, you can now close that chapter of that asset. So how do you do like the net book value? How do you calculate it? The net book value is the cost of asset minus accumulated depreciation. How much did it accumulate for those 5 years or the 6 years that you have kept the capital asset? So let's look at one example. The gain on a sale, when you sell that, how much do you get? Do you get a loss or a gain? So for you to get a gain or a loss, you have to get a cash receipt minus the net book value. But before we get there, how do you get the net book value? How much does your asset worth today? How much does it worth today? So when you look at this example, we will try to understand and track all the information about this asset. So that means things like cost of the asset when you bought it, the depreciation accumulated over the year, and the cash received from the buyer. And then now we'll try to calculate the cost, the loss, or a gain. So when we get the gain or a loss, we have to calculate the net book value. The net book value, the gain or a loss will be cash received minus the book value. So net book value, you get it by getting the cost minus accumulated depreciation. So now let's see. So you receive 38,000 minus, put a bracket. So when you're putting the bracket, you need to define the net book value. So 38,000, which is the cash that you receive, minus bracket 64,000. 64,000 was the cost of that asset minus accumulated depreciation, which is 22,000. That bracket represent now the net book value. So the gain or a loss will be cash received minus the net book value, and in this case is minus 4,000. in most cases you don't have to carry the negative sign in front of it, but it's a loss. So when you sold that asset, you sold it on a loss. So how do you now calculate it in your, record it in your journals? So let's see. Journal entry to record the sale of that capital asset. You will debit the loss on a capital asset and then debit the balance, which is 38,000. The balance was the cash received from the buyer, and then you debit accumulated depreciation, which is 22,000, and then the next thing is to credit the cost of that asset, which is 64,000. When you add the debit side and you compare it with the credit side, you will get a balance. It will balance out, and this is how you do your journal entry to record the sale of a capital asset. So now you have closed the chapter, and that is the end of the video. Thank you for watching, and please subscribe for more videos. Thank you. See you next time.